Hey guys, what is up? Welcome back to my Robinhood portfolio. Hope you guys are having a great Saturday. Where I'm at, beautiful weather out today. Went for about a 50-mile bike ride with a couple buddies of mine. Not too hot out, just the right weather. Beautiful ride, actually. Best ride I've had in quite a few weeks here. Really no complaints there. On the other hand, my portfolio, as you guys saw from my last video, down almost $148. That has a lot to do with the Fed having that surprise announcement on Friday, and the market wasn't quite ready for that. And it had to do with the Fed pretty much confirming, well, they didn't really come out and say they were going to increase the interest rate, but pretty much they were saying that the evidence they're looking at really strongly supports them doing that. So I'm expecting a rate increase here within the next couple of weeks, definitely within the next month or so. But we'll kind of have to see how that plays out. The immediate impact of that was the market generally trending down in all market sectors here. The Dow was down a lot, almost 2.1%. The Nasdaq, the S&P 500 as well. They're all down above 2%, closer to 2.5% actually. That translated to losses here. As you can see from my portfolio here, let me go to last price here. Trended down across the board here, almost all my stocks. And high dividend yielding stocks, which is the majority of my stocks, all trended down, including high dividend yielding ETFs, as well as some of my larger positions I have in Pfizer, Coca-Cola, as well as GE. But you can see here it's red across the board. So market as a whole trended down. I'm not sure if many of your guys' portfolios are impacted. My guess would be almost, this is universal here. Like I said, it was a broad spectrum decrease in the market. No sector necessarily was spared from this, but high dividend yielding stocks especially were hit hard. So I think what I'm going to be doing moving forward, I think I'm going to try to play some of the ETFs a little bit more aggressively than I have been playing. Up here, I love this Vanguard fund. It's a high dividend yield ETF. Great dividend yield, 3.2%, and it's well diversified. It's a Vanguard fund, which is typically a very good class of funds. And then, as you guys know, my bond dividend capturing strategy down here didn't play out as well as I would have hoped. Almost sold this when it was only about $8 down. Now total return is $41 down. So that pretty much wipes out the dividend payment that I received for this particular month, $15.65. The whole idea was to buy these in a cyclical fashion, collect the dividends, and then move on to the next one. Selling these off at essentially the same price, or maybe a few dollars less, but essentially making about $10 per trade, which would translate to about $40 per month and about a 12 to 15% return on money. I think I'm going to abandon that for right now. With the interest rates rising, these bond funds most likely are going to be trending down. So overall, not a bad investment, but I think there's better opportunities. And that's what I want to talk about today is ETF. So what is an ETF? So essentially, I think of an ETF as a mutual fund. And just to kind of talk quickly about mutual funds, they're basically an organized portfolio. It's basically a company organizing a portfolio around maybe a more certain market sector. For example, this one here, it's basically marketed around or engineered around high dividend yielding stocks. So if this was a mutual fund, you would have a manager that's basically actively managing this day to day, very vigorous sort of monitoring of the fund, aggressive trading. What that translates into is higher fees. So typically a mutual fund 0.65, 0.7%, some even charge up to 1%. ETFs on the other hand, again, they're sort of the same sort of fund, a collection of different stocks, again, around a certain market sector, like this one here, a high dividend yielding ETF. Basically exchange traded funds, but they work more like a stock. So mutual funds, you essentially buy or sell those once per day. At the end of the market trading day, I think like 8 or 9 p.m., they're basically priced. And then the next day you can go ahead and buy one, but you can't actively trade these throughout the day like a stock. So an ETF is more like a stock in that regard. And because of that, there's some important differences. First of all, like an ETF, these are fully diversified. So you can buy and sell these like a stock, but it's a collection of stocks. So you have a little bit better diversification than simply buying a few stocks here and there. Like I said, they're lower fees compared to more aggressively managed funds like a mutual fund. They are managed, but not day to day. It's more of a passive management, if you will. Other advantages, like I said, they're traded like a stock. So these can be purchased on margin, sold short. You can trade these throughout the day. You can manage risk by trading futures, options. I mean, they're essentially just like a stock. Another great advantage is that dividends, couldn't speak there, are reinvested immediately. So depending on how you have your fund set up, these are used to purchase additional shares of that particular stock. You have less exposure to capital gains. And some of this stuff I'm kind of getting into is more high-level trading stuff, but there's some tax implications between an ETF and a mutual fund. There are some disadvantages as well. Like I said, these funds aren't actively managed as much as a mutual fund would be. Intraday pricing may be a little bit overkill, especially if you're a longer-term investor. You're not going to be trading this day to day, so you're going to essentially buy this and keep it for 10 to 15 years, collecting that dividend and getting some capital appreciation gains as well. The bid-ask spread can be really large on these, just like a stock. They could actually be at higher cost. With mutual funds, typically, like I said, they're only priced once daily, so you're not going to be necessarily buying into a stock that has a premium on it. On an ETF, you may do that. So yeah, those are some of the advantages and disadvantages of owning an ETF. Like I said, I'm invested in this Vanguard High Dividend Yield ETF. There's other ones out there. iShares has a great dividend ETF. Let's just kind of pull that one up here while we're speaking about it. DVY, I believe, is the, yeah, here we go. iShares, Dow Jones Select Dividend, 3.1%. And you can see down there on the bottom tracks a dividend-weighted index of U.S. companies selected from the Dow Jones 500. Roughly about 100 stocks in that particular ETF. Another one, let's see if I can remember this right. I think it was like SDY. Yeah, here we go. Another S&P dividend ETF. Good dividend yield, 2.4. Again, kind of an index weighted average of some of the top 50 dividend-paying companies from the S&P 1500 Composite Index. So, great way to jump into the market, diversify, and like I said, these are held for a longer term. It's not as much fun as buying and selling individual stocks and securities, but this is more for the investor who wants to maybe get into a mutual fund but doesn't want to pay the high cost of a mutual fund, and maybe be a little bit more liquid as well. These you can buy and sell just like stocks. So I think I'm going to be moving away from my bond dividend capturing strategy, putting those funds, I got quite a bit of capital here, 3,300. I'm going to put those into ETFs. And then as the market's trending down, this is a great opportunity to buy some stocks as well. So I'm going to actually try to liquidate some of my capital from my E-Trade account with Dividend mutual fund I have, and put those over to securities here. I've been having a lot of fun buying and selling these securities, and been learning a ton about how to invest. So yeah, that's kind of my strategy. Like always, if you like my video, go ahead and subscribe. I really appreciate you guys' comments. I'm going to be doing another pick stock video tomorrow, basically where you guys give me some good picks for stocks to buy, and I go and buy 5 of those. I'm going to do another 5 stocks tomorrow. I really want to get up to, like I said, 100, 120 individual securities in my portfolio. As you can see, I still have quite a few securities to buy. Still haven't fully diversified, which I'm still looking to do. And then through this process, I'm going to try to pick, maybe 5 to 10 stocks that I really have a lot of confidence in, and putting a lot of capital into those. So a lot of these shares I only have 1 or 2 of. A lot of stocks I only have 1 or 2 of. But I'm going to get 5 to 10 and put in probably 50 to 100 shares per stock. So yeah, that's kind of where I'm at today. So as you guys see here down from the market moves on Friday, but kind of a different strategy moving forward here. So again, leave me a thumbs up, give me a like, give me a few comments, subscribe, and we'll see you guys next time.